I think all of these corporates who are really, call it, crypto native or like further along are going to try to pull all of the activity onto the chains that they own. And I think we're going to see more corporates launch chains. Like we are in the early stages, I think, of the corporate chain meta at this point.
This episode is brought to you by Zcash. You'll hear more about them later in today's episode. Nothing said on Empire is a recommendation to buy or sell any investments or products. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely their opinions, not financial advice or necessarily the views of Blockworks. Our hosts, guests, and the Blockworks team may hold positions in the companies, funds, or projects discussed.
Okay. Raw, we're doing this solo, I guess. Yano's no longer part of the picture.
Yeah, well, so listen, I listened to the podcast last week, and Yano starts it off with that he's hearing bad things about me, and that he's kicked me off the podcast, and so he didn't know the power that we had, and so now we're here. Yano's gone; he's cut. So the podcast, no Yano, he's out. So if he's really nice, we'll let him back.
Exactly. Will this be a good pod? I guess you were traveling last week. There's a lot that's been happening. Where do you want to start? I mean, we can talk about the markets. We can talk about the news. You're in charge now.
Well, listen, we can talk about the market if you want to. I feel like we've continued to have this conversation over and over and over again around the market is soft, but there are a bunch of things that are doing really well. There is this bifurcation that is existing between the haves and the have-nots, the things that are working that are not. You have to have some sort of use case that says that people want, right? Like you have to have product market fit. And like, we're just, all of these altcoins aren't doing well and they continue not to do well. And we continue to see softness. I mean, and then on Bitcoin side, obviously there's a lot happening in the macroeconomic situation. I don't know if we want to reiterate that again, but like, if you want to go into that, like we can definitely do that.
Well, as we're recording the pod, Bitcoin is just holding 100K, barely. But I feel like, Bitcoin goes down 5% and people just go out and say, oh, this market's topped. There was a comment that Avi made actually from that 1000X pod that said, as it relates to Mega ETH, which we're both investors in, and said, we don't need another L2 in the market. And there's a lot of infra fatigue. I think it goes back to what you're saying, which is it has been pretty tough for most of the alt market. Is that more reflective as you guys think about like making investment decisions? Like we have an excess of infrastructure, not enough like demand for it. We've talked about tokenization. We've talked about stablecoins. Is that enough to justify all of the infrastructure spend? Like when you guys think about, okay, we're raising a new fund, we're going to allocate to that to continue in infrastructure applications. I mean, you guys are investors in Polymarket. Like what is the next thing to support a lot of the plethora of L2s? I mean, gosh, or L1s. I mean, I'm curious. That I think is more of the interesting conversation, not so much are alts going to go up or down? Is Bitcoin going to hold 100K? I think over a multi-year time frame, it's like, how do we actually justify these valuations? What's the next poly market? Do you have a view on that?
Yeah, listen, we're long-term investors, right? And you are as well. I think you probably trade a little bit more than I do, but like we're very much around, focused on what happens in the long term. I think it's very clear that, the innovation that happens at the base layer is not done, right? Like everyone comes out and they're like, oh, like we don't need another L2. We have Solana. We don't need Monad. We have Solana. We have Base. Like we have all these other things. We have, and it's very clear that if we're going to bring capital markets on chain, that we're going to bring payments on chain, that just because there is, call it a surplus of block space today, does not mean that block space one is the best built for what we're talking about, right? So like it's, Monad is one of the most ambitious products in reinventing the way we think about execution and settlement, and bringing forth consensus. And like, they're trying to do something that is fit for a really large future, really future just evolution of capital markets happening on chain. And so I find that conversation to be really short-sighted and mostly coming from like the traders and from like, the anons that are, on Twitter who are like, oh man, I like didn't make money in the last like week. And so now I'm like, very upset about it. And very, it just doesn't really think about what is it we're actually trying to do here. Right. And I say this all the time, like it. And so I think there's obviously been an incentive to put more money into the base layers and the infra because of the fact that that's where a lot of the big returns have come from. I mean, Solana is probably the single biggest, VC outcome, right, that has existed in all of crypto. But applications are working, right? Like we see it in our portfolio. I was just having this discussion with somebody else. There's despite all of the price action, we have companies like Polymarket in our portfolio, like Rain Cards in our portfolio on the stablecoin side, that are growing at a rate of like 30, 40, 50% month over month. Polymarket deposits are growing at multiples month over month right now, right? Like if Polymarket is going to scale to the size that we were talking about, it's going to take up, basically all the block space that Polygon even has available, right? Like, and so I strikes me that, we're starting to see just an evolution of capital markets. We're starting to see people really excited about what that looks like. And we're starting to see like real companies, real asset issuers want to come on chain. And so the fact that we have just like, a lot of unused block space today, it really has no bearing around what we're trying to do over the future. And I just find that conversation to be, really, really silly.
Yeah, absolutely. Let's talk about some of the news. Obviously, Coinbase, top of mind, I think just came out yesterday. They called off the acquisition of BVNK. That was going to be a $2 billion acquisition. Then you saw MasterCard go out and acquire a competitor. How do you, any thoughts on that or reading into like why they called it off?
Yeah, on the Coinbase side, as I understand it, it really came down to some concerns around if there, the synergies that they thought would be there actually existed, and whether or not there was, things like customer quality and things like that. Maybe there was an attempt to change the price. This all is sort of rumored right now, so I don't know exactly what those conversations were looking like. But what I would say is like, what is very clear to me is that there are a lot of, and so maybe I'll take a quick step back. All of the stablecoin orchestration companies that are private right now, like not Bridge, because Bridge is obviously acquired by Stripe, all of the other ones, they're getting hit up today by every single company you can think of, crypto and non-crypto, for potential M&A. The M&A fever in stablecoins is just extraordinarily high right now. And so every single public company is doing work, right? Now, the question these people are asking is, okay, well, is this something I can build or do I need to buy it, right? And some of the infrastructure is really hard to build. If it's really on chain, like none of these guys are going to be able to go and hire like a good crypto native, blockchain engineer, an engineering team to really compete, right? But if there is, a lot of this orchestration that is happening, which has a large amount of fiat exposure and is really just, piecing together like banking rails, right, with like a stablecoin sandwich, as quote unquote, as people call it, in between, that's a lot easier for these guys to potentially replicate themselves, right? Yeah. And so so they're making that decision. At the same time, they're looking at these companies who have grown really, really quickly, but in payments, the history has always been that you grow really quickly based on a customer base that is maybe not well served by, traditional payment providers at this point in time. And so there might not be a lot of synergy between Coinbase's corporate customers and BVNK's corporate customers. Now they talk about, some of these, and they have some really, really awesome Fortune 500 companies, like, but like they probably also make a lot of money from, like gaming and gambling, because a lot of the stablecoin companies have made a lot of money from that, right? And that's not something that or a sector that a lot of these traditional payment companies want to serve, right? And so you have to think through, like, what makes sense for from a multiple perspective, if some of this revenue is not revenue that I want to that I'm going to keep, right? I'm going to have to cycle this revenue off anyways, right? And so that's I think the push pull a lot of these guys are trying to figure out right now.
Yeah, I mean, obviously, Bridge got acquired by Billion earlier this year. You've seen this, higher price, like just figures thrown out. I don't have the access to financials of, like, I think we talked about, what is it, the other company that was acquired by MasterCard, Zero, was it Zero Hash?
So the acquisition hasn't happened yet.
Yeah,
It has been rumored that they are in talks of the acquisition.
rumored. Yeah,
Um,
that's right.
yeah,
But I mean, if you're the BD, I mean, Coinbase has been highly acquisitive. This might be one of the larger acquisitions, could have been, um, other than Deribit, which I think I don't have access to financials of BVNK, but I think that Deribit was just more of a cash cow than BVNK is. What if you're the corp
significantly
dev
different
of
financial profile.
significantly
Yeah.
different profile? Yeah. So I'm just kind of curious, like, how do you justify? I get that everyone's trying to scramble to build, kind of get into this stablecoin gold rush of sorts, but at some point you got to go to your board and say, hey, we're buying something for 2 billion, not a small amount, make it make sense.
Yeah, I think, I mean, you have to understand and you have to believe there's real synergy value, right? I did actually hear, very interestingly, there's a public company that was looking at a stablecoin company that I know, and uh, they were talking to them about like price, and the public company CEO said, "I think the announcement alone and what it would do to my share price would pay for the acquisition." Right. And
Fair
he's
enough.
very attuned to the fact that the public markets right now want these guys to do something in stablecoins, right? Like they are very, very focused on stablecoins. They're very, very
Yeah.
focused on, how that might disrupt their current business models, right? And so I think that is, something
Yeah.
these guys are thinking through and the boards are thinking through, right? Um, that said, like to your point, like for some of these guys, like the banks, like how can you go do a big acquisition with a big multiple if it's going to, mean that you have to take like a big capital charge or goodwill, on your balance sheet, right? Like they're not going to want to be able to do that. And so I think that is a bit of a push pull right now.
Mhm.
But listen, I'll actually I'll reference something else. I did a call yesterday for one of the big banks. And so the sell side analyst asked me to come on
Mhm.
and talk to a bunch of his clients, big, the big, takers that you might know of, big hedge funds, about stable coins and tokenization. So I did that yesterday, and there was a lot of conversation around what is going to happen to Visa and MasterCard. What is going to happen to FIS and some of the
Mhm.
merchant processors and some of the acquirers? Like the analysts across the street actively are concerned around what is going to happen to these payment companies, these fintechs,
Mhm.
and so the CEOs hear that, and so they
Yeah. Yeah.
understand that they have to react in some way.
This episode is brought to you by Zcash, the decentralized digital cash that is encrypted to ensure agency and safety. With a fixed supply of 21 million and proof of work consensus, Zcash is encrypted Bitcoin. Buy, store, and spend encrypted Bitcoin using the Zcash-powered mobile wallet, Zashi. To find out more, visit their website or click the link in the show notes. Thanks to Zcash for making today's episode possible. Shout out to today's sponsor, Katana. Katana is a DeFi-first chain built for deep liquidity and high yield. No empty emissions, just real yield and sequencer fees routed back to DeFi users. Incubated by Polygon Labs and GSR, Katana is launching with notable ecosystem of primitives, assets, and partners like Morpho, Chainlink, and more. Katana's 1 billion CAT campaign is live. Bridge and deposit directly into vaults in one simple click and start earning immediately on your Ether, Bitcoin, USDC, and more. Follow the link in today's show notes to get started. As always, investments in blockchain technology involve risk, terms, and conditions apply.
Yeah. I mean, look, going back to your point, ICE, when they announced the deal with to invest up to 2 billion in Polymarket, the share price went up almost 4%, and that was, they gained over north of 3 billion in market cap alone. So, you could argue immediately you're quote unquote in the money, but so I hear you. But when I start seeing that, it just sort of, to me, is a bit of a warning sign of where we are in terms of the frothiness out there in the market. And, it reminds me a lot of when companies were putting blockchain in their, earnings calls, and, the Long Island iced tea phenomenon, 2017, 2018 era. I do think that stablecoins obviously are more real. Perhaps a more non-acquisitive kind of news was JPMorgan put their JPM deposit token on base this week. Talk about a company that's just been doing more of the internal work. To my knowledge, I mean, it's just they've continued to staff up the team over the years. They've built Connexus. Interesting, different to Stripe, they've decided to use public infrastructure. And they've kind of like iterated on this over time. Initially it was private, right? I believe like Onyx, I believe, then it was Connexus, and now they're using Base. So I'm curious if you follow that development, like how do you think about JP Morgan and their role that they're playing, and how it kind of relates to broader kind of corporate interest in crypto?
Yeah, I mean, the Connexus thing is interesting, right? So Connexus still continues to be, basically private infrastructure. That's where they're doing, call it all the cross-border payments that they're doing right now. The deposit token from JP Morgan, that existing on base is a little bit interesting for me because it's unclear to me. And I don't know, did you see in the announcement exactly what they're actually going to surface? And will actually be, on chain that people will be able to understand, because when I think about a deposit token, right? Like it makes complete sense to me that people will want to, and banks will want to be able to move money around their, call it their different regional banks, and, maybe around their like global corporate entities, within call it a shared, blockchain ledger. But clearly the banking regulators are not going to be okay with you taking like my deposit, tokenizing it and putting it on a public chain today, right? And so it's sort of unclear to me what exactly is happening there.
Yeah, I'm reading the announcement here. JP Morgan put it out earlier today, 8 hours ago. It said Coinbase and MasterCard have successfully completed test transactions using JPM coin. The ticker is JPMD, enabling near instant 24 settlement and real-time liquidity. JP Morgan's institutional clients can now exclusively send and receive money securely on Base, the Ethereum L2, enhancing digital payments ecosystem and encouraging further adoption. Since 2015, Connexus by JP Morgan has been a global provider of blockchain-based financial infrastructure and now provides USD deposit tokens on public blockchain. And so they continue. I'm kind of assessing this in real time. JPM Coin provides JP Morgan's institutional clients with the option to make on-chain native digital payments, which serve as a digital representation of a bank deposit on public blockchain. This will help meet the growing demand from both digitally native and traditional firms that want to engage further in the digital asset space with faster and easier money movements on public blockchains. Clients including B2C2, Coinbase, and MasterCard all successfully completed near instant issuance and redemption of JPMD on Base as part of the proof of concept.
Got it. And so this kind of sounds like
Yeah.
Sen or so there's like the Silvergate network and Signet, which all makes sense. Now those were call it like private blockchains. This is public. And I think it's super interesting that we're moving to public and with Base. My guess is that like they're probably doing what you're seeing done with like Figure and some of these others, which is that they're just sort of call it posting a little bit of data on chain, right? And like this is great that you can send this, but there's most of the call it like asset work is still being done in traditional systems off chain. But listen, great. I'm excited to see it moving that direction.
What I was in London and I interviewed this guy who was in not JPMorgan, but another large financial institution, Swiss-based institution, and they've been building their own kind of form of Connexus to do a lot of FX settlement within their clients. Especially, he was like, look, on the weekends, especially when the bank is quote unquote closed, we will utilize payment rails that are, 24/7, 365, and then we'll just kind of create that, instant settlement trading between our kind of clients. And so, um, different from JP Morgan, I think JP Morgan is probably one of the first ones to issue it on Base, which is pretty interesting. So we'll see how it evolves. I would say, fairly interesting. I haven't really caught up. We had one of the leads of JP Morgan way back, Tyron, a couple of years ago. This is one of the things that most people kind of really don't appreciate because JP Morgan's an interesting, like if you look at here with Jamie Dimon, and they've historically been slower as a financial institution publicly. Like they can't really solicit, they can't really offer or advertise like ETF products, to private bank clients. But on the other end, they have just probably one of the larger teams that have been doing research since 2015, which is not a small team, right? And they've invested a lot of resources.
They're doing a bunch of volume on that, like cross border and Connexus, right? It is just kind of like a private ledger thing that they're doing with like some other central banks, some other larger banks, but they're actually doing a lot of volume on that.
Yeah. How do you see the evolution of other financial institutions? Um, from what I understand, this token is really just for their institutional clients. Um, it doesn't really they wouldn't want this to be offered to other folks. Like they're really protective of their client base, but they're using public infrastructure. I think this goes back to a debate you and I were having about what makes a public or a private chain at DAS in London a couple of weeks ago. Um, but how do you think about kind of the fast forward 1 or 2 or 3 years, like more banks using public infrastructure? How are they going to use it? Is it like, yeah, like what's your version of the world in a couple of years?
I mean, obviously today, like you're gonna have a deposit token, right? Like you have to be a customer and you have to be KYC of that bank, right? Because it has to represent a deposit that you have, and they have to be able to move the deposit within that bank. Interestingly, though, like putting it on Base does allow for the opportunity for that deposit token to be used across assets or other deposits of other types of other banks, right? And it seems clear to me that like they wouldn't put it on Base if they didn't think that they would try to work with other counterparties, right? Because otherwise, if it was just an intra bank settlement layer, they would just do it on a private chain because it would give them the same benefits, right? And so, I mean, when you look at these public chains, like there has to be some sort of like trustless coordination because or if you're going to interact with others, there has to be some sort of trustless coordination. It can't be on a thing that's owned by JP Morgan, or it can't be on a thing that's owned by Goldman or whoever. And so I actually think that that is a signal that there will be probably, and that Coinbase is probably working with other banks to do something similar, with an idea that like maybe you can create some sort of like, interbank network, right?
Yeah.
And this is obviously the conversation around Canton, right? So, Canton launched their token, or their token finally got listed in a couple of places this week. And that's been a big part of their story as well, which is that like, okay, well, we have these like private blockchains that are basically just, just databases today, but like, we're going to open up their, interoperability with everyone else. And so then like all the banks can work together, all of the asset managers can work
Yeah.
together. I think it's pretty clear that like a lot of assets are going to be tokenized. They're going to exist on some version of something that can interop, right? Whether it is a public chain like Base or these like kind of like, siloed like hub and spoke models that we see on like Canton. I have an opinion on what works better, but it's very clear to me that I think that we're moving in that direction.
So a couple of things before we round up this discussion. Interesting, a couple related to this announcement. JP Morgan did say that they aim like they will expand this deposit token to more blockchains. I don't think they were specific as to which ones. And then the other announcement was that earlier this week, they announced, Connexus and DBS announced that they're developing this interoperability framework to enable transfers of tokenized deposits across public and permission blockchain environments. So I think on this point, what would you say to like folks within crypto that, do you read a lot into Coinbase deploying first on base versus any other public network? Solana, Aptos, Suisei, Arbitrum. Like, is that a strong signal of how corporates might evaluate like where to deploy? Because Base is backed by Coinbase and it has that kind of reputation. It might not be across the trilemma or trifecta of blockchains, decentralization, security. I'm curious, like, the world by which corporates might evaluate where to deploy is very different than how crypto natives have historically thought that was going to be the case.
Yeah.
Yeah.
No, I mean, I think it's pretty clear, right? All of these guys want to own their blockchain now, right? You saw we had Circle earnings this morning, and I don't know what the stock ended up doing, but right after earnings, it was down like 8% pre-market. It was, they talked about like, oh, now we need a ARC token for like their blockchain, right? Base has been teasing that they're going to have a token, right? Like you've got Tempo launching, they haven't talked about a token, but they're definitely going to have a token, right? And basically the incentive for all of these like corporates has been like, okay, well, I want to do some sort of on-chain network. I think I can build a better product if I own the entire stack. And like, they're just going to be incentivized to force it on their chain, right? Versus like, some other chain, as long as there's an ability to, access liquidity elsewhere, right? And as interoperability gets easier, like if you're talking about the Ethereum L2s, as you have like more based or native rollups, like the ability to move capital in between or access capital in between is much easier. And so like, I think it's very clear to me that, I mean, the reason this happened is because Coinbase is the first customer, right? And so Coinbase is like, I'm fine, going to be the first customer. You're going to put this on Base. Like, that's pretty obviously what the discussion was. The Connexus DBS thing, like, that might be somewhere different because, Connexus and JPMorgan have been working with DBS and in the Singaporean central bank around like cross-border money movements for a long time. But I think all of these corporates who are really, call it, crypto native or like further along are going to try to pull all of the activity onto the chains that they own. And I think we're going to see more corporates launch chains. Like we are in the early stages, I think, of the corporate chain meta at this point.
Yeah, absolutely. Speaking of, I want to remind folks of a bet that we made a couple of weeks ago. Western Union, Solana. In that time frame, Western Union has massively outperformed. Not because the stock has gone up dramatically up; it's just because Solana has gone down quite a bit.
Everything's got crushed.
Yeah, we'll see how that develops, but yeah, I think I think that covers it well for JPMorgan. There's a couple other news items that I think you alluded to, like that I want to get your take on. Like Uniswap put a proposal to Hayden had a post around like this fee switch. This is something that has been teased and talked about for years, right? The disconnect between like equity and the token. It's not specific to Uniswap. Many other protocols have this kind of issue. But how do you think about that? I mean, obviously, the regulatory environment has been changing quite a bit. Some of the investors of like Uniswap, have historically kind of resisted this, rightfully so. But I'm curious what you're seeing from other projects, specifically about Uniswap. I think a project like Uniswap doing it carries probably much more weight than a traditional, like some other random protocol, just given how important it is. But yeah, I'm curious your take on that.
I mean, this is great, right? Like, this is something we've been, I think, expecting to see for a little bit. I had speculated that they might wait to get like a little further along with like some sort of market structure bill, even if we didn't have full understanding of like, how people think about security versus not security. That said, like we definitely knew we were going to get Uniswap and then probably some others that were going to try to add this, type of fee switch over the next, during this like, initial period of this administration. I think for Uniswap specifically, they basically said they're going to collapse labs in the foundation.
Mhm.
Everything that is going to happen from here on going forward is going to be focused on protocol growth, right? And not just this products that might sit on top on the protocol. They're putting together a large growth budget of 20 million uni per year, which is what, 200 million bucks at current prices, right? They're burning 100 million uni from the treasury right now. They're going to really start to focus on, and I think this also shifts a big focus for them on continuing to push forward the hooks architecture in Uni v4 and trying to act as a more of an aggregator than just
Mhm.
a front end themselves. And so it's kind of twofold, right? Which is, one is okay, we're trying to make the token, and be one of the first ones to have the token really accrue value in a way that equity does, right? But we're also going to stop focusing on interacting with the end customer in the same way. So they are trying to do something that is, I think, protecting themselves a little bit, right? Because that is
Mhm.
where I think when you look at what came out of the ad committee earlier this week, that is where there's a lot of surface area of attack by the regulators.
Oh,
It's, what type of obligation do you have to KYC AML people if you own that end customer and they're interacting with some sort of front end? And that's where I think Uniswap has said, okay, well, maybe if we shift away from that, this this fee switch makes more sense and has less vectors of attack
yeah.
from potential regulator in the future.
Yeah, definitely. We should go back to that discussion. There's some stuff on the regulatory front that we should cover, but there's some debate around Michael from Curve, and then totally kind of corroborated. There's some folks in the industry that were just kind of critical of the mechanism itself. Um, you know, totally. Michael from Curve says, really glad that Uni chose an inferior mechanism of revenue distribution. Things are proceeding as planned. For those curious, he talks about the VLOCs and the buy and burn. Foley then kind of retweeted that and said, on target, any form of distribution of revenue to stakers is better than a burn. Um, any takes there? I mean, I think that we've seen some projects like Helium do it one way, and um, you know, revenue distribution better than a burn. Do you have an opinion on that? Does it carry regulatory kind of implications if you do it one way or the other? Um,
Listen, you know, I think the buyback and burn has been heavily talked about for a while, right? Um, it is definitely it is definitely easier to, from a regulatory perspective, to say, okay, well, I am just burning my own token, then, and which is essentially like a buyback,
mhm.
than to go and distribute revenue to a staker, which makes it look like more of a dividend, right? And from a regulator perspective, the most of the large law firms have said uh, it is less likely that you will get there will be ability for somebody to sue you if you're just buying your own token back and burning it in the open market versus issuing a dividend essentially, right? And so there's a the debate has always been, well, okay, well, buyback and burn is maybe good for price, but it's not good for the long-term holders in the same way, right? Because the long-term holders, the stakers, they should be incentivized through, getting revenue that makes it, call it, uh, much more valuable for them relative to the people who are just speculating on token price, right? And so if you're doing
Mhm.
this, call it revenue to
Yeah.
stakers or this dividend quality, you're just incentivizing, what we would see in the equity markets are long-term passive holders, as opposed to just,
Yeah.
trying to
Yeah.
solve for token goes up, right? And I think that's a good
Mhm.
argument, but it is a one that is tougher from a regulatory perspective.
Yeah, I would say I think you characterized it well. I mean, I remember Synthetics was probably one of the first protocols to actively reward stakers only, and because you had to have staked your SNX token to go short, effectively balance the book of a, you know, um, um, when people are going long, you have to have people that are shorting it. And so if you were staking your SNX, you would have gotten rewards, but you were effectively short and you had to manage that short. I think that required a lot of understanding of how the protocol worked. And I think people sometimes were surprised of that mechanism, especially when, you know, there's a lot of volatility in the market. The other thing, of course, is when you're staking, staking rewards and the treatment, the tax treatment of staking rewards in the US has been a bit unclear. They've reversed kind of the treatment of it. I was actively involved in like the Proof of Stake Alliance way back in the day of like advocating for greater clarity. I don't know if you guys are actively staking, but I know of a bunch of funds that just don't want to deal with that complexity because it just introduces a whole kind of noise in their strategy. Whereas the burn mechanism is just very clean, right? You're just kind of tracking that. I think there's like my opinion is there's no perfect solution. You know, a network like Synthetics, very different than perhaps you know, other protocols. Like in Synthetics, it does make sense to actively reward, like just do like actively reward participants versus not passively through a burn. But other networks might not require that. Just kind of depends. But I think as we get more regulatory clarity and we get tax clarity, I think we'll, you know, in a perfect world, I think it just makes sense to reward active participants versus just a simple burn. But we'll see.
Yeah, I think you have to do that long term. You might also, some of these, like, depending on what the staking looks like, it very clearly, it can be certain things like don't work or don't work very well for funds. Like, you know, obviously like the withdrawal queue for ETH makes it really hard for funds, right? Who aren't like really like long-term oriented, right? Or they have to use like liquid staking, which they can do, right? But it is a derivative and theoretically there's other risk involved there, right? I think there's, you know, a lot of these other, you know, L1s have these sort of like epochs that, like, you know, you have to, you know, like Avalanche kind of has these epochs that you have to select for like some period of time, right? And things like that. And so, um, so it's not super straightforward, right? And then obviously for the funds, you have to make sure that you can do it through your, you know, qualified custodian, right? And so for, you know, Uniswap is obviously fine. They're in, you know, all the qualified custodians. But, you know, as this goes like longer tail, like a lot of tokens are not actually, you know, able to be received and staked through a qualified custodian today.
This episode is brought to you by Zcash, the decentralized digital cash that is encrypted to ensure agency and safety. With a fixed supply of 21 million and proof of work consensus, Zcash is encrypted Bitcoin. Buy, store, and spend encrypted Bitcoin using the Zcash-powered mobile wallet, Zashi. To find out more, visit their website or click the link in the show notes. Thanks to Zcash for making today's episode possible. Shout out to today's sponsor, Katana. Katana is a DeFi-first chain built for deep liquidity and high yield. No empty emissions, just real yield and sequencer fees routed back to DeFi users. Incubated by Polygon Labs and GSR, Katana is launching with notable ecosystem of primitives, assets, and partners like Morpho, Chainlink, and more. Katana's 1 billion CAT campaign is live. Bridge and deposit directly into vaults in one simple click and start earning immediately on your Ether, Bitcoin, USDC, and more. Follow the link in today's show notes to get started. As always, investments in blockchain technology involve risk, terms, and conditions apply.
Transitioning a little bit into, obviously, we've talked about Monad here, and we've talked about Coinbase and their acquisition of Echo. They, I think, are the first project to go through this kind of public sale offered directly on Coinbase and to their clients. You know, the terms of it, and if we can share the screen. Yeah, so let's go to this. So Monad, you know, they're announcing that the Mon public sale, first ever token sale on Coinbase. Sale starts November 17th, accessible in like over 80 countries, including the US. You can, you know, I don't want to get into all the details of the public sale, but this is pretty interesting. I mean, I think, you know, historically Coinbase hasn't really, you know, participated in this at all. You had CoinList played a role, Binance certainly played a role, other exchanges played a role, but this is the first time Coinbase does it. Yeah, I don't know if you guys were involved in this, you know, because I know you guys are investors in Monad. I am as well, but curious, you know, your take here.
Yeah, I mean, the other thing here, right, was that like Monad, they announced all of their token economics, and so I think it actually the token like the forward markets or the pre-listing markets on like Hyperliquid traded down a decent amount on this. It seemed like it was mostly around some concern around I think only 3% is going to the airdrop, right? And a lot of the people who were like hedging on those like pre-markets didn't like the 3% for the airdrop. I think the 7.5% going to this, below the last round valuation to the, potentially participants on Coinbase. I think like that's actually a very good number. Like that's super interesting. I think that should hopefully with zero lockup too. Like you'll definitely see a lot of people selling, but I think what they'll try to do probably, and I don't have any inside information here, I just speculate on how this might work, is what they'll probably try to do is they'll try to do, it says up to 100K, but you'll have very, very few people get 100K. You'll have a lot of people get 5, 10K, right? And those people who get 5, 10K, even if they're unlocked from day one, like when you have 5K in, you might not sell it, right? Like you don't see the real reason to do it, even if that 5K has turned into 10K. But if you have 100K turned into 200K, like, there's just like, I think much more likely from a just a psyche perspective that people are going to go sell it. I think on the Coinbase side, like when they announced the Echo deal, like we knew this is what was going to happen, right? Like this is where we were going. Like they're going to want to play Coinbase as a bigger role in all towards of token listings, asset listings, and just like call it capital formation. Like they've been very clear about that. The fact that Monad is the first one, I think is great. I mean, we're obviously investors, but this is clearly a part of a much bigger strategy for them.
Yeah. So just help me get this straight. So you have Hype pre-market listing Monad at like 0.05, and the sale on Coinbase is roughly half of that, like 0.25, 0.025.
That's right.
Is that right? Got it. Do you have any sense of like how the allocation is going to work? Like, there is this cap of like 100K. Any details on like Coinbase is it up to Monad, up to Coinbase? Are they going to reward just based on your activity on Coinbase? If you've been a loyal customer, like if you have coin stock, like what's the criteria and the eligibility as to how much you're going to get? Or is it just going to be based on how much demand they get, and they're just going to, allocate that kind of pro rata? Or
I think they're gonna try to make it how much demand they get and then allocate it pro rata. That's the way most of these things work, right? Either that or they'll just do it random, right? So those are the two things that you technically see. I don't have any inside information on how they're going to do it at Coinbase. My expectation is that it would be, if you think about the way these things work in traditional markets, right? It's typically not up to the asset issuer. It's up to the broker, right? And so like in this case, the broker being Coinbase, they'll probably be the ones that make the decision. Same thing you see when these things happen on CoinList, on Echo, on before on anything else, right?
yeah.
And so my expectation is that's what ends up happening. But Coinbase, I don't think has been forthcoming yet with that, how that works. And I don't think they're going to be. They'll put something out there, but they're not going to go super deep on that. But I do think they'll try their best to make it as broad as possible with like smaller sizes, right? And that's the way CoinList has always worked.
Yeah, I mean, it makes sense for them as a huge win. I mean, I think from a retention standpoint, if they're offering it to over 80 countries, it makes you more inclined in a very competitive environment for exchanges from a customer acquisition retention standpoint, like giving folks access to this deal, which is probably one of the most anticipated in the year, along with Mega ETH. I think it's and Plasma. I think it'll be interesting how how they do that mechanism. And I'm sure people are going to bitch and complain about the allocation, as you can never get tokenomics right, you can never get airdrops right, you can certainly never get like allocation right. But we've talked about like IPO markets being highly inefficient. Companies like Coinbase have done direct listings. Folks like Bill Gurley have advocated for that type of mechanism. Something like the Circle IPO, you could argue is huge. Like you left a lot of value on the table because it priced at, what is it, like sub 10. It's not up,
No,
or
it
like
priced at
30
30, 30,
bucks,
30
30 bucks,
bucks.
30 bucks. Yeah. And
Yeah.
then it just kind of like, I was thinking of figure, but like, obviously, you know, how do you think about like the high pre-market and the kind of commitment of Monad to price it? And clearly the market thinks it's worth like 2x that. So like you're still leaving a lot of value on the table. Why commit to a level now versus make it sort of like a Dutch auction mechanism or some other way um, on the Coinbase sale?
I mean, the same thing is true of public markets. Like people want the investors to make money, right? Like if the investors don't make money, like that is when people get really pissed off, and then you don't incentivize like long-term holders. You put people in a position where they get like very upset, right? And so, especially when you're doing these retail distributions, like people want retail to have some sort of baked in kind of upside, right? And so
Yeah.
the idea that there's these things are really inefficient, like that's not totally wrong, but it's also a feature, not a bug, right? Like people actually want there to be these IPO pops. They get people talking about it. They get people to make money. They get people excited, right? And I think the same thing is true here, right?
Yeah.
Now, the one thing that's true in pre-IPO in these pre-launch markets on like Hyperliquid is that everybody in those markets is a risk taker, right? Because of the fact that like all of the short interest there, for the most part, or the vast majority of it, is people hedging, right? So they obviously think that like
Yeah.
they're like long the asset up to some point, but then they're trying to hedge out, but they don't actually know what the token will actually be trading at. So they're risk on, right? There is no, call it, like quote unquote basis being done here, or then those kind of like core types of traders that form the basis for other markets, right? And so I think there's, and I say that to mean that like I think everybody is a speculator, right? In those markets, in a way that like Bitcoin markets, not everyone is a speculator, right?
Yeah.
And so there is an interesting dichotomy around how these pre-launch things work, and like how you should think about what that means for the token price in the near and long term. I, you know, oftentimes these things trade right up to them, and then they kind of trade down a little bit. A 2x for the retail guys, like that sounds like a good win for everybody in my mind. Monad doesn't
Yeah.
need the extra money.
Yeah, no, and I was going to that. Like, I was just reading. BitGet actually has a good blog about like dissecting, because they were pretty open about kind of all the. They had like an 18-page document talking about like even the relationship with market makers, the loans that they're giving. Just kind of hammering out a couple of details here just to round out this discussion. The token sale, they're selling up to 7.5% of the initial total supply. At that level of 0.025, if they exhaust it all, they'll raise roughly 188 million. To your point, I mean, they don't need that because the last round, the Series A, they raised 220 million. And in the seed and pre-seed, collectively, they raised close to like 40 million. So, if they raised 240 million, they definitely don't need that money, right? So, but, I think it's at that level, the FDV is 2.5 billion. The high pre-market is implying 2x that, so like roughly 5 billion. In terms of the tokenomics, Category Labs Treasury will take 4%, Team will take 27%, investors will take roughly 20%. The ecosystem development category is 38%, public sale 3.5%, 7.5%, airdrop 3.3%. So yeah, pretty interesting. I wouldn't say anything like overly funky there. I think it's typical for a lot of projects. What else is interesting here?
Maybe one thing that we should call out here is the fact that they're allowing zero lock to the US, right?
Yeah.
So the one thing that has happened in almost every other one of these types of pre-sales has been that like, yeah, in other jurisdictions, you have no lock whatsoever, but in the US, they do this 12-month lock. The reason for that is Rule 144, so it's regulatory.
Yeah.
And essentially the fact that, for Rule 144, that if the token is considered a security, then that you have to, if it's a non-listed security, you have to make sure that you don't allow people to sell for 12 months. Otherwise, you're violating securities laws, right? So the rule 144 means that you have to lock it up for that period of time if it's a security. And so Monad's taken, there has been the first one, I think, at least the first one of any major note that I know of, that has taken the point of view that like, hey, we're just going to go and treat the U.S. as much as we treat everybody else, because presumably because they feel strongly that the risk of them being deemed as security is a lot lower, or is not very high, that they're willing to do this. And so that is, I think, a little bit of an interesting change relative to what we've seen or how we've seen some of these others lists. I mean, even like to the Mega ETH point, right? Like they did that auction at $1 billion cap, a few weeks ago, and for the U.S. they had to the U.S. investors had to
do a 1 year lock. Yeah.
Yep.
Yeah, it's interesting also, of course, Coinbase has had to have approved that structure, and they have obviously, so like very strong signal into what regulatory environment we're in today. Just the last point on the Monad, what was interesting too is they disclosed the market making arrangements, which is something that historically hasn't been really disclosed. To give people some perspective, I'm sharing the screen here for folks seeing, they're working with, what is it, 5 market makers. Interestingly, the duration of the loan is 1 month for all except Wintermute. The size of the loan is also the smallest for Wintermute. There's a lot of chat on X around like just implying like just reading into that. Monad kind of goes into the criteria as to why they selected that. Why only Wintermute has this 1 year commitment. Any thoughts into that? Like, is the Wintermute, I guess, historically has gotten some criticism, and as every market maker in that page at some point has gotten criticism. I'm curious your thoughts there, and how you thought they kind of structured the loans and the arrangements with market makers.
Yeah, I mean, I thought it was interesting that they did this. Some other tokens have done it, but not a ton. I want to give Monad a lot of credit here for just all of these, just being as transparent as they are, and putting out these this documentation, right? Obviously, on Wintermute side, like Wintermute probably just told them that they wouldn't do it with a 1 month contract. And they made the decision that Wintermute was important enough that they would, and that they would give them a longer contract, but they also sized them down to the smallest loan size, right? So Wintermute obviously solved for like, hey, we'll take the smallest loan size, but we want to be there for a year. The way this works, and I think probably everybody knows this that listens to the pod, is that all of these guys have 3, 4, 5 market makers. And so it's not so much as like that these other market makers are going to go away in a month. It's just that Monad preserved the optionality to fire them and add somebody else, or to fire them and maybe not need 5. And so I expect that most of these guys, they just continue to get rolled into different contracts regardless. And so not that surprising to me. That said, like, I think this is it's pretty standard the way this looks at the moment. And so this wasn't surprising to me at all.
Yeah, what's also interesting is, so they're allocating in total, what is this? Let me go back here. 160 or so tokens?
Yeah, 160 million of tokens.
160 million of tokens on a
$10 billion supply, right?
Yeah. Versus they've also allocated this sleeve of 200 million tokens for DEX liquidity. But it's interesting also there, right? They're carving out more tokens for DEX liquidity versus market makers. Curious how that gets allocated. And there's some folks that are saying, hey, like obviously this report says like that might not be enough. Typically, many projects allocate 2 to 3% for market making quotas, whereas this is much less. So yeah, it's pretty interesting. We'll see how that translates into price discovery. And I would think that there's going to be a ton of activity just given airdrop and the fact that it's immediately tradable. for the Coinbase allocation, and so there's a healthy amount of supply out there to yield some decent price discovery combined with like pre-market activity. So we'll see.
Yeah, but and the other thing to note here, right, is so everyone we saw there were kind of crypto native, like market makers, right? That are a lot of those guys are working like longer tail, but who are the biggest market makers on like Coinbase and Binance, right? Like it's actually not these guys. Maybe it's Wintermute, but it's like right now it's like Tower Research and like Jump
Mm-hmm.
and the big traditional guys. Those guys will just
Yeah,
go buy in the market, right? And
yeah,
they
market.
like, and so I think clearly what Monad is taking the perspective of is they think that their token will be something that people want to trade, that there'll be a lot of volume, and that the traditional market makers on those exchanges will be willing to go and quote because of the fact that there will be so much volume, and they'll just buy the tokens themselves, which they need to hedge out that risk.
Yeah, absolutely.
This episode is brought to you by Geodnet, the world's largest decentralized RTK network delivering real-time, centimeter-accurate positioning around the globe. Powering technologies that enable precise navigation for drones, autonomous vehicles, first responders, farmers, and robotics, Geodnet shows that blockchain can be a truly transformative force. By delivering real-time, centimeter-level accuracy, Geodnet enhances emergency response, boosts construction precision, and enables advanced navigation for drones and surveyors far beyond the limits of standard GPS. To find out more, click the link in the show notes or follow them on X. This episode of Empire is brought to you by VanEck's on-chain economy ETF, Node. If you feel like you are constantly missing alpha, never have time to scroll through crypto Twitter, Node is for you. Node is actively managed by an experienced team with years in both TradFi and crypto. That team at Node looks to capture the most powerful trends across all of crypto while actively managing volatility as markets evolve. Super important in today's environment. Check out Node's track record so far at vaneck.com/empire/node. That's vaneck.com/empire/node. You can also, a little easier, just click the link in the show notes. Thanks to VanEck and VanEck's on-chain economy ETF, Node, for making today's episode of Empire possible. As always, investments in blockchain technology involve risk, terms, and conditions apply.
We've covered a lot, man. What else is on your mind?
I guess we started this talking a little bit about the market overall, right? I think there's been a ton of discussion recently just about how maybe a lot of the crypto native traders are wanting to move to like equities, right? I think but then we talk about like everybody was trading the DATs earlier this year, but now even I think MicroStrategy is below 1 MNAV at the current time. Should we like have a discussion around what's happening in the DAT space, right? Like, should we bring that back up?
Definitely should. Yeah, when we go there. I
Yeah,
haven't
and
candidly followed as much the MNAV for these guys. I think Blockworks actually might have a dashboard here, but yeah, it's looking pretty ugly.
Yeah, it's looking really ugly, and so I've one of the things I've started to wonder a little bit is like how quickly are we going to see the DAT M&A market? I don't know, like in the conversations that you've had, like are you starting to hear people continue to talk about DATs? Like how are they thinking through what they're going to be, how they're going to approach this market going forward? I actually very surprisingly, the XRP one got launched. There was there's one or two other DATs happening right now, but very surprisingly to me, there still continues to be like altcoin for not highly traded altcoin DATs that people are trying to put together. And I would have thought that they would have died by this point.
Emphasis on trying to put together. I continue to see the occasional random project launch a DAT or try to launch a DAT, but it hasn't been as successful in terms of like capital raised. Some have just I think the capital is really dried up for a lot of these projects, and this is not a Solana DAT, right? It's a if you're not in the top 10, top 20 of market cap, and you're trying to do a DAT, it's just like really, really hard. I've seen terms be changed around much, but of course you're now dealing with the in-kind contribution, which makes it very, very hard to get it actually approved, right? So I think, yeah, it's I haven't heard on acquisition stuff. I was at the Galaxy event a couple weeks ago, and you had a couple of folks, the Ethereum folks on the Ethereum DAT, and then there was a Solana DAT, and they had kind of hinted at this, like there might be opportunities. I wouldn't be surprised. I mean, it's going to be a world of have and have-nots. But yeah, I mean, these instruments are highly reflexive. I mean, even if you're MicroStrategy and you're in an environment where like your MNAV is just getting crushed, like can you actually do an acquisition? Um, I don't know. Do you have folks internally with the capacity to do acquisition? Because a lot of, I don't know from your standpoint, but a lot of these DATs, the management teams are much to be desired, I would say. Like, yeah, okay, you're indexing on like crypto nativeness to sell to the market in a bull environment. That works fantastic, right? You have someone like Lubin just, sell the dream and he's good at that. But who else is on the team to actually operationalize and make these businesses like justify the MNAV? You have to produce cash flow. You have to, make it a viable business model. Maybe I'm taking too much of a fundamental view. And look, I participate in some of these DATs. I don't, so I don't know.
Yeah, I think it'll be interesting to see what happens. We're it's still a big topic of conversation. I know like there was the Cantor conference this week, and like there was a lot of DAT discussion again.
Did
I
you
think there's
did you
also a
not
lot
go
of
to
DAT
that?
discussion. So I ended up not going, but I've heard from
Oh,
others. Um, just
what happened there,
I've been
man?
traveling so much. Yeah, just too much travel.
I was gonna
So
say, like, are you worn out there, man?
I think I am. I'm trying to stay home. Well, I've had like multiple people be like, "Hey, you look kind of tired," and I think that is one really fucking rude. So maybe people should stop telling me that. But two, maybe a sign that I need to travel a little bit less. So
It's so
yeah,
distracting.
yeah, I know
Um,
it really is.
what is I
Um,
mean, you participate in some DATs. I have two. Where how does this end up? Like, are we gonna? We've had discussions around DATs potentially being like the thing that really drags the space down. Um, equity markets have been volatile. Like, how do you like? What's your? Are you still cautiously or selectively pursuing these conversations? Do you think there's still a place in the world for DATs to persist, or how does this actually end up?
I mean, I think DATs still like there's a reason for certain of them to exist, a small number of them, and like ones that offer certain types of access or to maybe an altcoin that they can't get access to right now through an ETF. Maybe somebody can't get access to like staking yield right now. I mean, it's very clear that like an ETF is much more capital inefficient than some of these like Ethereum DATs in terms of like managing like yield generation specifically. And so the
Yeah.
DAT should trade at some premium to the ETF. So I think they mean to exist, but like not in the size and scale and amount of DATs that have existed today. I think we're going to see a lot of consolidation. We're going to see a lot of people give up on these things. We're going to see M&A. And over time, I think we'll look back and be like, yeah, that was really frothy, and sort of the same way we did in the SPAC market. But like, there should be some of them, right? And they would continue to exist. So my expectations we see if the macro market is a lot better next year, which I think it might be, maybe we won't have the reckoning yet, but like that reckoning is
Mhm.
coming.
Yeah, absolutely. I mean, it always felt to me like, arbitrage strategies only last so long. And, you know, eh, again, as you said earlier, if you're you should approach this as a long-term investment. Most of the folks that have like tried to be traders can do phenomenally well and then sometimes blow up, especially when we start using leverage. I've really avoided or try to avoid instruments that um, force me to be correct on timing. And I just have always felt that DATs are that type of structure for the most part. Like there's always nuance in the structure and in the I'm not categorically saying that all DATs are bad. I participated in some, as so have you, I think. And so, but on the margin, I mean, I think it in an isolated view, if you just hold one, like a DAT or just the underlying, I think for the most part, for most folks, it is just better to hold the underlying and not kind of play the premium or discount. That just like is a trading game, is a timing game, and it's just really hard to get timing right in this industry. Like everyone thinks in a certain part of the cycle that you can really get timing right, and then you get smacked by the market and says no, you definitely can't, because it's like highly irrational, and you can't really explain why things like Fartcoin just go parabolic or Zcash just goes parabolic too.
Crazy, man.
Which I was hearing about Zcash. I heard a lot about Zcash, token Dubai. I went to a couple of events. It was like percolating. It's like, hey, like Zcash. I'm like, man, I've held Zcash since like 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 it was a darling way back in the day, but it's been impressive. Do you guys have a position there? I mean, I know you guys have pursued the privacy thesis, but
We don't currently. I would say we've been, I think, cautious on the privacy thesis, especially considering everything that happened,
tornado.
right?
Yeah,
And so on the tornado side,
yeah.
so we've been cautious. We did look. We did try to re-underwrite Zcash. Call it in the last few weeks. We probably missed like what we thought was like the major run, and so then it was kind of like
Hmm.
less attractive to us. But there are a lot of smart people around it right now, and a lot of
Yeah, yeah. I mean,
people.
I saw a hackathon like Kobe Balaji. I mean, Zoko is one of the smartest cryptographers. Eli, who I didn't appreciate, was a co-founder of Zcash too. He was like a
Yeah,
co-founder of Starkware, co-founder of Zcash. I met Zoko, uh, and I felt he was like the main force, and he had been for a while. But then you guys were involved in Near, and so Near's also involved in it. But it's like sort of like I do have a position in Zcash. I've had for a while. I mean, I was holding a bag way, way back in the day. I did re-underwrite it. I did put in a position, not at like $50, closer to where it is now. Um, but it was interesting. It has like sort of the meme characteristic of 21 million Zcash. Um, and, but yeah, I think like it has been interesting to observe and actually paying more attention to what's going on there, especially just today. I saw this hackathon and,
I will tell you, like, there's like, to your point about the hackathon, like, there's a bunch of people around who are like, okay, well, like, how do we turn this into an ecosystem right now? And
yeah,
there's active conversations around that. So, um,
yeah,
I mean, people kept shorting it all the way up, and the shorts kept getting blown out. Like, people never learn in crypto, right? Like, you don't short momentum, right? Like, you're
just
just gonna
don't.
get blown out. Yeah.
Yeah, absolutely. Um, Definitely, man. Before we go to content of the week, anything else?
Did you want to talk about the Hyperliquid bridge halt today? You have any opinions on that?
I had not tracked that.
Yeah. Okay. Well, we don't have to get into it too much. I think I don't understand the full implications yet. But essentially, there was basically there looked like, or at least people believe, that there was some sort of manipulation, and I think of the in the
Popcat trade.
HLP3 vault. Yeah, based on like a Popcat. Somebody that was like going like very levered long on Popcat through a bunch of different wallets, and then trying to I think make the vault accrue some losses, right? Similar to like what looked like happened in Jelly Jelly,
Hmm.
call it earlier this year. And so for some period of time, the bridge, Arbitrum bridge, went down and stopped processing withdrawals, at least for it was over 20 minutes. So people were speculating that this was due to that this had been done intentionally to be, and was due to trying not to let what people thought was like an attacker, be able to
Hmm.
take money off a platform. Um, I don't know how much this is still kind of evolving. I don't think we've seen yet a post from Jeff or anybody about it, and so we're still trying
Hmm.
to figure out exactly what's going on. But just a interesting, I think, thing to think about again as we continue to talk through you know what the line is for decentralization versus non-decentralization, for applications versus
Hmm.
protocols, and like how that might fit into some sort of regulatory thesis. I think my expectation is Hyperliquid is going to be one of those, along with Uniswap, one of those names where a lot of this debate centers around. And in fact, I'll tell you, when I was talking about this thing I did on the sell side analysts for one of the big banks yesterday, there was actually a lot of talk around like, is Hyperliquid, like what is Coinbase's market share going to look like over time? Is Coinbase still very interesting in terms of a potential buy? Like, what is the competitive pressure going to look like? And like, do we believe that things like Hyperliquid are going to take market share because of this reg arb that they have? And does there need to be, could that reg arb close? And if that reg arb close, would Hyperliquid still take market share from something like a Coinbase? And so a lot of people are thinking about that now with Hyperliquid at the center of that conversation.
Do you think there will be blowback? Because, like, again, we're going back to that Black Friday event where historically you've had, in moments of stress, exchanges temporarily halt, temporarily, block withdrawals, deposits. Like, it's at the discretion, and you're subject to their terms of service and what have you. In this particular case, the validators made that decision to like the emergency, and it's the first time that has happened. I'm just kind of reading up on it live right now. So do you think there's going to be blowback here? People being a little bit more cautious around, okay, well, like, yeah, we like interacting with Hyperliquid, but it sets a precedent of maybe this continues, this happens, and maybe it's not too dissimilar from an exchange where you are playing and you need to abide by the house rules. And if whoever the house here is whether it's 4 validators or the core team or a combination of people to really control the protocol, is that any different from an exchange?
I don't think people care, right? Like time and again, right? Like the ethos in crypto has been around, the cypherpunk ethos that's just in crypto. The users, as we've gotten bigger and more mature, have continued to tell you they do not care about the ethos of crypto. They care about making money. They care about being protected from losses. They care about good user experience. Like I just think like that everybody. I mean, was it how long ago was it that like SWE basically like rolled back state so that one of those hacks didn't essentially weren't able to like move capital off of the SWE blockchain? Like we've completely forgotten that happened, right? Like no, but like, and that is like on a relative basis, even relative to this or anything else we talked about, like one of the most insane things that have happened in terms of like people just showing that like decentralization is often a little bit of a meme, right? And so like I just think people would much rather not lose money and much rather make money than ever care about like what the house is doing. So.
Fair enough. I mean, look, there was another report. We won't get into it now, but I think Bybit put out a report like looking into the code base of a lot of L1s or L2s, and they had the ability to kind of freeze assets, which is, I believe, what SUI did. I don't think they rolled it back. I think they just kind of froze the assets. But
if I remember, what they actually did was that the validators stopped validating transactions from the addresses that were affected or that had performed the hack. Which for all intents and purposes meant that they essentially like froze these addresses.
Yeah.
So
exactly. Yeah. Look, you're at a room. You're talking about crypto, and these are people that have used USDC. You ask them, "Hey, are you aware that like Circle can freeze your USDC?" How many people do you actually think in a room of 100 or 1,000 people? You do a survey. How many people do you actually understand that's possible?
Yeah, outside of like crypto, like I think like not that many actually. Like but at the end of the day, like who can also freeze your money? JPMorgan, right? Like
I know, absolutely right. I mean, I always take the position like a marginal improvement is still marginal improvement. You just need to think about, sometimes people in crypto just want to reach an end state of perfection that is not possible. But I was just looking at like just around the greatest benefit is just you're introducing more transparency. So like you're seeing what Hyperliquid happened. You're like, you can discuss it, you can evaluate it, you can make a conscious decision whether you want to interact in the protocol or not based on some precedent. And yes, even though the market or people might have a memory of a goldfish, you have that precedent like crystallized in a public record that allows for that discovery and for that at least decision, whether you're the end user or the institution that is going to decide whether to route activity to Hyperliquid. I definitely think that a precedent like today sets on the margin, something to point to and say, hey, maybe we will not route activity there until we get some resolution from the team. And it allows certain people, crypto has this dynamic of like a vocal minority that probably is going to like require people like the Tays of the world to say, wait a minute, like what the hell happened here? Like give us answers, right? And oftentimes that may not have happened if you didn't have as much transparency. And so that's a good state. Like I was looking at First Brands too, right? And Howard Marks, but just transitioning to content of the week, he put out a great kind of memo, and I love his memos. And he was talking about First Brands. They actually underwrote, and they had lent out a small position, and then as they dug more, they kind of were like he goes into the memo. I won't go into it here of like certain red flags as they started to underwrite, that and just people kind of forget like crypto does have a lot of issues still. It is kind of a plane being built in flight. There is still need, like there's still an opportunity to iterate on the consensus algorithm on the L1 on the broader infrastructure, but we are creating a more transparent system, and that allows us to learn from our mistakes and as a collectively kind of create more protection in the end state, right? And even like the FTX recovery process, it took way faster than the Murdoch like creditors, right? Not Murdoch, Madoff creditors that took like decades. They're still being paid out. So I'm not saying crypto is perfect, but you're creating at least a public record that you can point to, and at least certain people in the community will like require and demand answers, and no one's forcing anyone to interact in Hyperliquid.
Yep. All right, content of the week.
Anyways, yeah, let's do it. What's the content of the week?
So I'm late to the game here on this one, but so I've just started reading Breakneck, which I think was released in August, but kind of really it was, I think, in a lot of people's minds through September. But it's Breakneck, China's quest to engineer the future. A guy called Dan Wang, who is the author. You probably know Dan. He's probably one of the most foremost like analysts looking at China, and really just kind of examine. Blog. Yeah, great blog as well, right? So China just really examine China's how they approach technology and geopolitics, and how different it is relative to the U.S., where the U.S. has always been kind of run by lawyers, and China has been run by engineers and mathematicians. And so I think it's probably understanding what's happening in China continues to be one of the most important things that we can do as Americans right now, and especially as you think through macroeconomic and foreign policy. And so super interesting book. So I would recommend it.
Yeah, I have to pick it up. For me, I'm rereading Against the Gods. It's the remarkable story of risk, just because of historical evolution of like risk, and from Pascal to obviously now hedge fund managers. And so probably a good time as ever, as the markets are very volatile. Although I am sitting pretty on my Western Union position, Rob. It's not because it's rallied a lot. It's purely because Solana and everything else in crypto.
Listen, I'm in the more volatile assets, so that's to be expected. So, maybe Santi, before we go, I just want to say one thing, which is that they really they did you dirty on the haircut thing last week. I think the haircut looks nice. So.
Rob, I appreciate you saying that. There's been now 5 or 6 people, including my partner, that have said that this is the worst haircut that I've gotten in 5 years. So you are welcome back in this podcast any day. Yano, you might have to struggle to come back here, but like I think this is a good place to end it. My confidence has gone marginally up with this terrible haircut, but yeah, good stuff. A lot of stuff happening. I'm going to be in New York next week. If you're in New York, Yano's in New York. I don't know if he's going to be around or not, but we should maybe do an in-person recording.
Yeah, let's do it.
Yeah. Last shout out. We're going to do in-person event in New York as well. It's called Office Hours. It's meant to be just kind of kind of like a academic discussion. A lot of folks from traditional finance, folks from Citadel and trading firms, and just that have been historically very skeptical of crypto, but are interested in like tokenization and some of these areas that, like stablecoins. So it's going to be a small gathering. I think 30 to 40 people. If you're around, I think it's on the 18th. But anyways, I'll retweet it, and we'd love to have you guys there if come prepared with spicy takes. And so yeah, open invitation to folks, and we have to hold the line, but we'll try to get everyone in the mix there that we think is good for the discussion.
Don't miss it.
Okay. All right, Rob. Thank you, sir. Have a good weekend, guys.
Santi.